Zoom just reported earnings. Earnings per share came in beating $1.07 versus the estimate of 84 cents, and they matched their revenue, $1.1 billion, and that was the expectation. Now, looking forward, they're expecting earnings per share to come in at $1.12 and revenue again to be $1.1 billion. So I'm going to look at this press release along with you guys for the first time. Third quarter total revenue came in at $1 billion, up 5% year over year as reported, and 7% in constant currency. Enterprise revenue came in at $614 million, up 20% over the year. Margins came in 34.6%. I don't know if that's good or bad. We'll have to dig that out. Number of customers contributing more than $100,000 in trailing 12 months, up 31% year over year. So this number is actually pretty important to me when I think about this, because this is where competition is coming into play. Apple's doing their thing. You have Google out there doing their thing. Microsoft Teams doing theirs. So the fact that they're still growing, and I personally like Zoom the best out of all of them. So that is a good number to see coming through. Revenue. The total revenue for the third quarter was $1.1 billion, up over 5% for the year compared to last year. Let's see here. Is there anything in here that is telling me a good story? Financial outlook. Zoom is providing us the following guidance. So actually, this surprises me, and I actually kind of like this coming out of Zoom. You notice that a lot of tech companies are not giving forward guidance because they're saying, hey, we're in an uncertain macro environment. We don't want to give forward guidance going anywhere into next year because we're unsure of what's going to happen with employment and usage and whatnot. So here they go. Fourth quarter, fiscal year 2023. The total revenue is expected to be between $1.095 billion and $1.105 billion. Revenue constant currency is expected to be $1.12 billion to $1.13 billion. Non-GAAP income from operations is expected to be between $316 million and $326 million. So nothing's very earth-shattering, but they're staying the course. They're absolutely staying the course. So when I look at a company like Zoom, and let's pull that up here, I say, first thing that pops out to me, absolute first thing. And guys, this whipsaw has been unbelievable. I'm sitting here in the studio with Tim. We saw this thing go from plus 5% to minus 3% to plus 2%, and now it's sitting at minus 1.38%. And I even pulled up on Twitter to look at it, and the tweets are all, oh my gosh, look at what's happening to Zoom stock price. It's going crazy. But the first thing that I want to look for, I'm going to come to quarterly, is what has happened with their growth through COVID, okay? 136 million in 2018, 436, and then look at these jumps that started. 135 billion, 3.64 billion, 4.3 billion. So, yes, they were a young company. They had room to grow, but I say COVID helped them out a lot. And for me, I have to tame them when I start looking at them. I don't even know that $79 a share is a good price. We're going to find out. I'm going to run it through Stock Analyzer, but you have to keep in mind that they are coming off of extremely, extremely euphoric highs that happened during COVID. I mean, look at this. They made $2.5 million in 2018, 13 million in 2019, 230, a billion, and then basically a billion in 2022. So you have to be able to tame these numbers. Now let's go look at their shares. So they've done some dilution. It's actually not as bad as I expected. I expected much, much worse share dilution coming from a company like this. Now let's pull up their 8 pillars. Wow. Wow. I'm actually quite surprised by this. Pretty good ROIC, good revenue growth, no surprise there. Good net income growth, good cash flow growth. The debt is not terribly surprising because the shares, they probably use shares instead of debt, which is not a bad idea, but I actually expected a little more debt because a lot of tech companies took out a lot of debt because money was so cheap. So let's see what analysts have to say going forward. Earnings per share growth, they see. And what was their expectation? $1.12 in the next year. Okay. That's for the quarter, though. All right. It's pretty consistent with what I'm looking at here in 2023. So not a lot. Actually, it's shrinking. Earnings per share growth is shrinking. Now, and let's look at this as well. Yeah. So what they're looking at in here is saying the shrink, they're coming off of these crazy highs. The growth almost has already happened in the industry based on where the numbers have gone. So they almost need to, let's go back to the income statement. They almost need to, they went like this, way up here. It almost needs to come back and just kind of stabilize somewhere in this area, somewhere in here. So they're probably not going to come back to this baseline, but this was abnormal, and this is where a lot of people were pricing them in at. So they need to just come back to some type of stability before, well, that's what the analysts think, and that's probably what I think. So let's go in here. This is going to be a hard one to do stock analyzer on because of the craziness, and we don't have 10 years of full data. So I'm going to put in 4. Yes, that's low. I will go with 10 and 16. I will go all across. Just going to kind of run the gamut here, okay? Profit margin. I will go with 20, 23, and 26. 20, 23, and 26 because those should be very similar, and they already are. I will go with 14, 16, and 18 for the PE and the price to free cash flow. And for my return, I'm going to go 12.5% on that low end because, I mean, that revenue growth is extremely low, and I don't necessarily think that that'll be realistic, but it could be if you normalize revenue. 15 and 17.5 on my high end. Current price is $78 as of right now because the stock price is now down 3% after hours. So here's my numbers. $37 to about $92 and a middle ground of, call it, $58. I'm probably looking at Zoom, if I was wanting to invest in this, somewhere around 55. And I'm not saying that I don't want to, but I would like to see the company come back to some normalcy before I would ever do some type of investment in it. But I am going to put this on my watch list at $60 and let it notify me, and maybe I'll take some type of small position in there sometime in the future. So guys, subscribe to the channel. Tomorrow I'm going to be reacting to Baidu, Dick's Sporting Goods, Best Buy. Those are coming out. Paul and I did some videos this week. Those are going to be coming out. Subscribe. You'll love it. See ya.